It's a brand new week. It means we have 5 days to do business together starting from today, Monday. Welcome to the program. Here's what's coming your way the next 55 minutes. Unfortunately, petrol queues are back in major cities in Nigeria. Investment opportunity in Egypt. They are auctioning about 60 billion Egyptian pounds of treasury bills. And it's a steady one for Ugandan shilling after a lot of movement. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Let's do business now, starting from the global space, where we see that global oil prices fell in early Asian trade on Monday, reversing gains from Friday, as United States inflation data further dimmed the prospect of interest rate cuts anytime soon and boosted the dollar, which hurts oil demand. Brent crude futures fell 75 cents, that's about 0.84%. to $88.75 a barrel, while WTI of the United States also dropped 65 cents, that's 0.78%, to $83.20 a barrel. U.S. inflation rose 2.7% in the 12 months through March, according to data that was released on Friday, above the U.S. Federal Reserve target of 2%. Low inflation would have increased the likelihood of interest rate cut, which would stimulate economic growth and oil demand. The dollar strengthened on the prospect of higher for longer interest rate. A stronger dollar makes oil more expensive for those holding other currencies. Brent oil prices could swing higher again if U.S. inventory data and China's PMI index show improvement this week. Connected to that, the World Bank has warned that Kenya could post an increase in the price of petroleum products in the coming months should the ongoing conflict in the Middle East escalate. The bank sees a reverse of the gains central banks have made in easing inflation. In its commodity market outlook for April 2024, the global lender notes that heightened geopolitical tensions are keeping upward pressure on prices of critical commodities like fuel, stoking the risk of large price spikes. The Energy and Petroleum Regulatory Authority of Kenya has announced a drop in fuel prices for April 2024 following trends in the strength of the shilling. However, the value of the Kenyan shilling registered a fresh decline in the third week of April to 132.5 Kenyan shilling. In April 2024, EPRA announced a decrease of Kenyan shilling value, 5.31 per litre of petrol, petrol per litre of 10 litres, and then 10 Kenyan shilling for diesel and 18.68 for kerosene. And talk about petroleum products now. The queues at petrol stations in Nigeria are back in major cities, and this is in spite of that statement by the Nigerian National Petroleum Company Limited that hurdle which caused the bottleneck has been resolved. That statement was released on Thursday, while motorists seem to prefer NNPC stations more, going by the length of queues. It seems some have gotten so desperate and ready to pay as much as possible as they queue in other licensed filling stations. I hear in Lagos, it's gone as high as 750 naira for a litre. Sources from the different bodies of oil marketers say the PPMC platform used to make payment has been inaccessible for about 2 weeks now, making it impossible for retailers to place orders and make payment for petrol. Ipman has also said that this might take about 2 weeks before it's been sorted out.
You can see with our monies, we can't even get the oil. Like me, I wanted to get gas for my family, and I have to queue because I can't go in because the queue prevented me from going in, even to get the gas. Although I equally want to get petrol, but you can see the situation is really pathetic. People are queuing. In some instances, you will even go to the filling station, there is no oil for you even to buy. So I think we are really in a dilemma. We need the government and those independent marketers to come to our rescue. Let them bring the oil. We are ready to buy it, even at the prices they are selling.
You hardly see where there is fuel. The whole residents are suffering. And the unfortunate thing is that there is no clear message, either statement from the government to tell you this is what is happening. There has been speculations. Some say that it's because the government is about to reduce the price. Others say it's because there will be price increment. And the government has not deemed fit to come out with a clear statement to say this is what is happening. And residents are suffering.
So there you go. No products, no communication, unfortunately. And this is in spite of that statement by the NNPCL that, whatever is causing the bottleneck, which we're not told from the NNPCL, has been sorted. So we do hope to get communication from the NNPCL today. I know that Channels is talking to the NNPCL, so please do respond and give us the reason so we can tell Nigerians what's really going on and for them to know what's going on and know what to expect in the coming days. Let's leave the petroleum markets now and go to metals. Gold was a little changed ahead of the key U.S. inflation, which was later released, but prices are on track for the first, and now it slipped on Monday as hopes for early interest rate cut this year dampened, while focus shifts to the Federal Reserve policy meeting after that U.S. inflation number and U.S. farm payrolls data, which is due this week. Spot gold fell 0.5% to $2,327.09 per ounce. U.S. gold futures dropped also 0.4% at $2,338.30. The Federal Reserve's policy meeting from April 30th to May the 1st, and then there's the non-farm payrolls data, which is due on Friday. These are key market data this week expected, and the Fed is still holding its benchmark interest rate steady at 5.25% to 5.5% at this meeting. Investors are currently pricing in single rate cuts this year and see it coming in November. That's according to the CMC's watchdog. Let's come to Nigeria now and continue the conversation we started on Business Incorporated on Friday. Remember that consumer credit scheme that has been approved by the president. On Friday, we did talk about the issue of credit rating, which of course is going to be the foundation to access this. Today, let's talk about how you can access it and what you should prepare for, what you can benefit from it. So we're discussing the consumer credit scheme and tips to access the benefits that are inherent in that scheme with the managing director of Optimus by AfriInvest, Mr. Ayodeji Ebo. Mr. Ebo, good afternoon and thank you for your time.
Good afternoon. It's great to be here.
Great. So we see this credit call set up by the president. Obviously, it's going on in other countries, especially the Western world. A country like the United States, you want to buy a phone, you don't need to get all the cash for it. You can, buy it and then pay for it. But when we look at the specifics of Nigerian environment, would you say we are ripe for this? Because we still have issues of bad debt and all of that. And somebody did say that it seems Nigerians, a lot of Nigerians do not have the culture of paying back loans.
Okay, thank you very much. This is a very interesting question. First of all, I must say that the initiative is laudable. Yes, there will speak on things that should be improved on. It's just a starting point. We've not had this in the country before. But like you rightly said, in other climes, part of the major backbone for the success of this, even both from the government angle and the private sector, is about building the right credit, especially credit scoring. So you go to develop clients, even for those that don't need loan, but in a bid to build a very good credit scoring, and so that to give them access to borrow at a very cheap rate, they collect loans and pay back to build that trend. And some other countries, even your utility that you pay for on a monthly basis fits into your scoring. So you have a target. Part of what needs to be done, that the government needs to do beyond the setting aside of 100 billion to fund this based on the 2024 budget, is a robust credit structure of credit scoring. Like you have the unique biometric verification number in the banking system. There should be unique credit scoring system that if I access a bank A today, the first thing they will check my credit scoring. Yes, you have the credit bureau system that checks whether you have been paying back, whether it's performing or not. But there should be a standardized system to assess everyone. So, and once this is done, then you begin to educate Nigerians on the implication of this. So when someone at his current level borrows 10,000 and does not pay back, but knows that this 10,000 that I'm not paying back, by the time I get to a level, I'm able to borrow 1 million, and I want to do that because of what I've done 5 years ago, 10 years ago, may stop or not, may make me borrow at a very high cost. So once we begin to do that and imbibe that culture, Nigerians will want to pay back because you won't want to, because of the circumstances today, want to soil the very potential that you have tomorrow. So there's a lot that has to be done by the government around the structure, around the policy, so that we standardize the 100 billion naira is just a small fry. There's a limit to what government can do. But once there's standardized arrangement as credit structure or scoring, the private sector too would be looking forward to extending credit. And once we do that, I think that it will minimize the default rates that we currently see in the economy.
So the presidency has said that eligible Nigerians should apply for the consumer loans before May the 15th. What should I be doing as a Nigerian to be eligible, and how should I approach this?
Okay, the first thing I think we need to note is that they are facing it. It's going to be in phases. So the phase one is for civil servants. And you would see that means salary earners. These people already have access to loans before. But I think starting from the low risk, so you've seen the triangle that was used, starting from those that are a bit low risk, that they know they have been borrowing and paying back. Secondly, they'll come to the white collar groups. That's those that have the day-to-day job and they earn monthly, which are also monthly earners. The last space, which we know it's the high risk, is the informal sector, where we still feel there's still the gap. So that is where a lot of the structure needs to be put in place. So I learned this morning the portal has been opened. If you want to access it, if you are eligible to access, you go to the website that has been open. I think www.credithub.ng for you to register. You will see you just follow the instruction. It's very straightforward. But it's basically, I think the first phase is basically for those that are salary earners. First of all, for them to start with. But we feel that amount, 100 billion, is really very small. So focus to re-emphasize that should be on building that structure where they can partner more with investors or private sector.
When you say partnering with the private sector, in what form do you see that coming? The private sector will start giving credit also?
Yes, that's what I mean. So if I know that there's already a structure for scoring, I'll start with those that have the high score based on the methodology that has been used. You would see that for some banks, they give mostly to salary earners on a monthly basis that you pay back. You need to have your salary with them. For the business people, they check their cash flow for those that have been banking with them for a certain period. But there's no standardized way. So if you go to bank A, the requirement is different. You go to bank B, but it's almost uniform in developed climes. So if the government come up with this policy that, for me, how you are speaking now, I should know what my credit scoring is. And there should be an incentive for people that are paying back. That is the essence of the scoring. So if we are on, let's say you're on 80%, if the interest rate to borrow is 20%, if you're on 60%, maybe you are going to borrow at 22%. So everyone would target to focus to borrow at the possible lowest interest rates by building a very good credit score. So if that is done, the private sector will see that this sector has been the risk, and they will be willing to channel a lot of funding to that space.
But at this point, has the presidency elaborated on how they are going to check the interest rate? Because I mean, if they're going to go with the existing MPR now, that is another discouraging factor.
Yeah, so that's one thing that is still missing. The interest rate that will be used is missing. The single obligor limits, which means what, as an individual, what am I, the maximum amount I'm entitled to borrow, or what would be the yardstick to know what I can have access to. My salary 500,000 monthly. Is it 1/3 of that based on the rule that I'm able to access? So these are some of the things that were not included in the circular, but it's just a starting point, and I believe that as things unfolds, we think we need a lot of more information that will provide clarity within this space.
Yeah, we certainly do, especially looking at the time that the presidency has kept, May 15th. I mean, eligible individuals are supposed to have by then made their request. But thank you so much for this clarity. Managing Director of Optimus by AfroInvest, Mr. Ayodeji Ebo.
Thanks for having me. Have a good day.
You too. All right, another thugging issue on the mind of, especially in this case, the Chartered Institute of Taxation of Nigeria, CITN, is the issue of tax holidays. Currently, about 107 companies are benefiting from the federal government's tax exemption. And, there are pros and cons to this issue. At the time when the country seeks revenue to handle some national issues, or some are arguing if we should be treading this path at this time. But let's discuss this with a partner at Tax Services, Transact, and he is also a chartered accountant and an auditor. Joins us here in the studio, Mr. Victor Athe. Mr. Athe, good afternoon, and thank you for your time.
Good afternoon. Thank you for having me.
So, do you worry with the Chartered Institute of Taxation that at this time we shouldn't be talking about tax holidays, waivers, exemption, whichever name you want to give it?
Okay, so the issue of tax holidays is a delicate issue, or is one we have to look at very delicately. Now, the whole idea of tax holidays is to drive investment, right? It's a strategic initiative of government to encourage more investment in the economy. However, I do think, from my experience, in what I've seen play out in Nigeria so far, that there is a need, after, granting tax holidays is just not enough, right? We have to go back periodically as a nation to see whether the objectives of these tax holidays have been achieved. How do we do that? When you grant tax holidays, you expect a commensurate level of investment, or a level of investment that will, that will bring benefits to the government, right? So it's not enough to have tax holiday schemes or incentives. There is a need for government to periodically do an assessment of whether the country is reaping, benefits, the expected benefits from these tax incentives. And on a case-by-case basis, right, we can now determine whether some incentives should be, put set aside, things like that.
And we haven't been doing the assessment, or have we?
Yeah, so I think that's where we're lacking. There's a need for that assessment to be periodically done in an objective manner, right? It's not enough to talk about these things. There has to be action. There has to be a concerted, proper plan of action to ensure that Nigeria, when we're not we're not losing revenue from tax incentive schemes.
So we had the Presidential Committee on Fiscal Policy and Tax Reform, but it seems they've been busy. They've been kind of quiet for some months now. Or perhaps I'm the one who has not been followed up. Should this be part of their responsibilities?
Yeah, absolutely. If you recall, the chairman of the committee earlier, when he gave his quick win report, to the president, I think sometime last year, they made it clear, right, that their work will be in phases, right? Because it's a whole lot of work to do. I mean, when you talk about tax reforms, fiscal policy, it's a whole lot. I mean, they have to look at a whole lot of issues, right? I think the next phase, I think they have about 6 months. Based on what I understand, they have 6 months to come up with their progress reports. Of course, it's going to take time. It's not something that it's not something that we're going to be able to see very quickly. It's going to take time for them to come up with their report. They have to examine a lot of things, box of incentives, ease of doing business, look at the various tax laws and all of that.
So last year there was the Finance Act 2023, and then you had the issue of enhancing compliance and enforcement modalities around taxation, and we talk about AI, for instance. We talk about, I think there's a voice. There's a part that you're supposed to use a voice prompting also, all of them to boost, because we know the government has come to say they are not looking to increase tax, but to enlarge the tax net. We've been talking about technology in the tax space for a while. Are we moving? Are we making movements?
Yeah. So when you come to the issue of technology, we all know for Nigeria, it's relatively nascent, right? Applying technology to improving tax collections is something that is also going to take time. Of course, the efforts in the right direction. I mean,
have we had movements recorded?
Yes.
Yeah, there's the digitization and provision of interactive voice response intercom services. All of that's supposed to make it easier.
Yes. Technology is work in progress. It requires a lot of investments, right? We all know the Federal Inland Revenue Service is investing a lot, right? I mean, they designed internally a system for collecting taxes, which is called the Tax Pro Max, right? So I think that's a step in the right direction. But bringing in the issue of AI to tax collection is going to take quite some time, right? It's not something we're going to see immediately, but I'm sure. I mean, I understand that it's their ongoing efforts along that line.
So what about states? I know Lagos State, they are quite, ahead when it comes to adopting this technology. And what about other states? Do you know if they are also? I think Kaduna also is a state that has embraced a lot of technology and this voice interactive. But do you have an idea, other states?
Okay, so now the issue with integrating technology for states, right, will be paucity of data, right? And that's a national issue, right? It's one thing to develop a technology, it's another thing to make sure you get the technology to cut across, the majority of the tax base that you envisage, right? Now for states, it's a bit complicated, right? Because they're battling with revenue generation. They have a lot of funding deficits that they are battling with, and they're not generating much, right? So for states, it's a bit complicated, right? Because a lot of states are not producing maximally. They're not, the internal revenue generation is not yet there. So it's going to be a complicated issue. I think there has to be a way of improving data collection, right? That's the only way investment in technology can pay off.
Yeah, but you still have at the bottom of it the issue of trust. Nigerians will ask, how accountable are the government on different levels, in the management of taxes? Do we see what they're using it for? That will be a motivation to, embrace the system even more.
Absolutely, you're spot on there. The issue of trust also is related to what I call tax morale, right? How easy is it for a taxpayer to comply willingly, right? So that speaks to the issue of trust. If I don't trust, tax creates what is called a fiscal or social contract. And we know in every typical contract, you want to be sure the other party is doing their own part of the bargain, right? So for taxpayers generally, the issue of trust is still a big deal. It's something that will not just go away by we just talking about it. There has to be government has to demonstrate, right? Government has to end this trust by demonstrating to the masses and showing the masses. We have to see. Taxpayers in general have to see what their money is being put in use. And disturbing headlines like the ones we've had in the past about a sitting governor, doing all sorts of involved in corrupt practices. We have to move away from that life. So I think it's a general mindset shift that government has to champion with results. It's not just enough to talk about it. We have to see that government is willing. We have to see that we have to see that
the
government,
willpower.
the willpower. We have to see that from what government does, how resources are allocated, how resources are spent. It's not just enough to borrow, for instance. The question is, what are we borrowing for? What is the borrowing used for? And so that also speaks to the issue of debt to GDP ratio, tax to GDP ratio, and all of that. So when you have high debt to GDP ratio, one should expect that if debt is put to proper use, right, then we should see the gains, and with time, the tax to GDP ratio should also increase.
Yeah, but even the International Lending Agency, IMF, World Bank, they've said that tax rates are really low compared to a lot of countries and all of that. So it seems we're still getting away with some things.
Yeah. So very correct. Yeah, tax rate is low. We have so the point is we have Nigeria has capacity to generate a whole lot more taxes than we're doing currently, right? But so it's about different issues. The trust issues there, the fact that businesses, corporate businesses, individuals are really not willing, to pay tax because they're not convinced, right? That the
So
tax
back to the trust issue.
Back to the trust issue. Then there is the issue of systems, tax administration, right? How so in my experience as a tax professional, I see that government increasingly puts scrutiny on existing taxpayers, payers already in the tax net, right? Meanwhile, there's a whole lot of opportunity to bring in more into the tax net. So the question is, what are we doing? Are there systems in place to widen the tax net? Because it's not fair to continue to put burden on existing taxpayers that, to be fair, doing their bits to comply, because these guys are already in tax net. When they file returns, you go after them. The question is, what is government doing to widen? So you talk about
which is one of the responsibility of the Reforms Committee, the Presidential Committee. They're supposed to widen the tax net, and it's not a matter of increasing taxes.
Exactly. That's one of the things the Reform Committee is working on. But I tell you, that's not. It's not easy as it appears. On the surface, it's a whole lot of work because you have to deal with the vast informal sector, right? The informal sector is called informal because it is not properly regulated. You have markets. You have.
Yeah, but I guess harmonization of the tax system is also one that they will need to work on, because if it's harmonized, there have been some taxpayers who have complained about that. If it's harmonized, it's easier, for people to know what they're supposed to pay, who to pay, and when they're supposed to pay.
Yes, very, 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 very correct. The number of taxes as we speak is about 40-something. Very high.
Yeah, so more than 40-something percent of profits, of corporates.
Exactly. So now, what part of the things the Presidential fiscal reforms, tax reform, fiscal policy committee is doing is reducing the number of taxes, meaning examine the total number of taxes we have, the various taxes levies, right, and strike off the ones that are redundant, more or less, or the ones that are duplicated, right? So that's an issue, tax duplication. It affects ease of doing business for the small, businesses, so they have to deal with a lot, levies here and there. You go to some states, you see economic development levy. Meanwhile, it's also collected at federal government level. So there's a whole lot of...
talk about harmonization. Thank you so much for your time. Partner at Tax Services Transact and Chartered Accountant, Mr. Victor Athy.
Thank you. Thanks for having me.
Let's take a break. When we come back, we'll head to the market. Stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We'll head to the markets now with Anita Edet. Anita, good afternoon.
Yes, good afternoon, Nini. And final week of final 48 hours
day
of April.
Yeah.
Final 48 hours.
No, okay, we do have tomorrow.
Yes. Today is 29 and tomorrow is 30th. And just like that, April is gone.
Yeah.
And guess what? Nigeria stock market, it's still bleeding for so far.
Yeah, I think we hit a new low. Well, not a new low, but at least we've gone down another step. We had
in
98.
The new year, it is a new low. Because we came all the way from yes.
Okay.
Year to date we're at 31.27%. But when you look at that, we started the year, we crossed into the 100,000, and then of course we climbed up to about, if I'm correct, about 130,000. But then we receded to about as at intraday, we've even gone below the 98,000, which we even thought that maybe is going to stop there. So month to date we're about minus 6.1%.
And I do remember one of our analysts saying that once we go below 100, we need to know that there's, we need to start looking really careful because we just lost that 100. And I know how long it took for us to get, to hit the 100,000 level, index level.
Yeah, but at the same time, you should consider that there are several factors that have been contributory to this. And no doubt, most importantly, has been the impact of that recapitalization announcement by the Central Bank of Nigeria.
Don't put it on the recap because even before the recapitalization, the market was already going down.
It's not
about the recapitalization. I think attention has turned to the fixed income market because the
You're right. You're
yields
correct
are
on that.
really attractive there.
Yeah.
And, investors just want to make profits. That's all.
As well as a tight monetary policy environment, because I spoke to one of the analysts and he said, one of the traders, he said, no, this the tight monetary policy environment is not really encouraging for the equities market.
Yeah,
and
but,
just like
but
you
it's
mentioned,
good for the fixed income. So
yeah. So it's a side swing. It's a side swing. So
Exactly.
put your money where your mouth is, and that's where we start off the market. Intraday figures for Africa market is mostly a mixed trading for most of the major indexes on the African continent. Like we were mentioning, like we talked about, myself and Ini there, we said Nigeria's stock market still in the red, minus 6.1% down, and it has dropped all the way from the 90, all the way from more than 100,000 points to just about 97,916.45. In the red, 0.27%, about 0.25% in the red. And this is no thanks to last week we saw the likes of MTN Nigeria, FBN Holdings, as well as Nestle pulling the market back. And then more than 784 billion naira was wiped off, pulling the market's all-share index, the market's capitalization all the way from 56.3 trillion naira to about 55.51 trillion naira last week. So, but as we speak, the market is still oscillating, and we will see the final figure at about 2:30 Nigerian time. So, but for the South Africa JSE, we see 1.23% increase in the green for Nigeria, one of Nigeria's major contemporary in terms of the market. When you talk about whether the financial market or the manufacturing or the GDP, that is one of Nigeria's contender. Now let's move over to Egypt and Kenya, where we see Egyptian stock exchange. Wow. When you said Nigeria's stock market is bleeding, but this was a massive bleeding at intraday, 4.91%, while the EGX 30 still around the 25,000 points. It just dropped a little bit below the 26,000 points, but still comfortable at 25,000. For Kenya Stock Exchange, it closed Friday. The NSE 20 closed Friday in the green, 0.31%. Now let's talk about fixed income market, Forex and fixed income to be precise. The Naira, we had it last week, official figures, just when we were celebrating that the Naira has been gaining, but the sentiment was just very short-lived, because the Naira at the Nigeria Autonomous Fixing Exchange, it was down at about 1,300. But let's talk first about the FX market, where we see the FX, the total turnover of FX carried out at the FMDQ's group exchange. We saw the total turnover down by 7.64%, and this is largely no thanks to the FX, the Forex market, where we saw it was down by 149.1%. Then, of course, also for the FX spot, we saw a pullback of 8.84%. Now, moving over to where I was talking about the Naira against the Naira-dollar parity. On the FMDQs, where the Forex market is traded, the Naira was down by 12.05%, in contrast to what it was trading. That was on April the 19th. It was at about 1,206. But as at last week, April the 25th, we were at 1,309 Naira 7 kobo. That's for the NAFEX. But for the NAFEM, that's the Nigeria Autonomous Foreign Exchange Market, we see the Naira at about 1,300 and still moving. So with this numbers, they're still interchanging because we're at intraday activities. So now to give us more perspective on this, let's talk to Senator Audu, a Forex and fixed income dealer at Access Bank. Thank you for joining us, Senator.
Thanks for having me, Anita.
Okay. Now let's talk dollars. It's been in the news. Nigeria's we were all celebrating, jubilating, and even thinking that the Naira would firm against the world's #1 currency, that's the dollar. So now, can you tell us what is making the Naira to make some pullback against this #1 currency?
Okay, thanks. So yeah, as you rightly said, we've seen a depreciation in the Naira from the recent lows that we had experienced. It had always been expected, considering that the appreciation was rapid. So we did expect to see some moderation or some correction, at least in the short to medium term. So we did see that correction sometime last week. We saw the NIFEM rate, the Nigerian Autonomous Foreign Exchange Market rate, depreciate to 1,339 Naira from 1,309 naira. Today, we've seen those trades trade at about those levels. We've not seen a significant depreciation like we have seen in the previous days. Market turnover has remained north of 300 million. On Friday, we saw that at 309 million. On Thursday, we saw that at 318 million. So market liquidity is still robust. We also saw the CBN intervene to BDCs last week. We saw about $10,000 sold to each BDC at a rate of 1,021 naira per dollar. So we're seeing forces from outside of the CBN and from the CBN to stabilize these rates. And our projection is that we'll see some stabilization or moderation this week.
Okay. So let's leave that for the forex market and talk about the fixed income market. Last week we saw the auction carried out by the Debt Management Office. We'll see that on our board there. But now, can you give us details about this? The auction carried out by the Debt Management Office last week.
So the NTB auction was conducted on Wednesday last week. The offer was exactly what was to mature on Thursday of 143 billion across the standard maturities. Standard maturities being the 91-day, the 182-day, and the 364-day bills. Across all three maturities, we saw DMO, Debt Management Office, maintain the stop rate. We saw stop rates on the 91-day close at 16.24%, unchanged from the last auction. The 182-day closed at 17%, and the 1 year closed at 20.7%. The subscription for this auction was significant, about 758 billion, while the DMO sold under that at about 362 billion. So we've seen a deliberate and consistent effort from the DMO and CBN to maintain rates at high levels to keep these rates attractive to local and foreign investors, and we've seen benefits from that. So we've seen rates persist across the NTB and NMO auctions at north of 20%, 20.7% at the last auction.
Okay, Senator, I think we'll keep it there. Tomorrow we'll be talking about the equities market, but let's leave you for Wednesday when we'll be having a public holiday. Financial markets will be closed, but till then, have a nice weekday ahead. Now, Senator Audu, fixed income and forex dealer at Access Bank, with the numbers for the fixed income market. Now we'll talk about the fixed income market. This is the board, but now let's talk about the markets outside of Nigeria and outside of Africa, Middle East. We saw the Abu Dhabi as a mixed movement at intraday, where we see the Abu Dhabi both on the United Arab Emirates, 0.23% pullback there from the Abu Dhabi, while there's a 0.07% advance on its younger brother there, the Dubai FM, both on the United Arab Emirates. Now we see investors are making some move there, lots of some bargain hunting. At some point, a couple of weeks ago, those markets were in the red, but they're trying to make a comeback. Now, for the region's biggest market, 0.5% at intraday at about 12,292, almost 12,000. The numbers are still changing as we speak, because these numbers, they keep changing because lots of horse trading, changing hands are changing in terms of the transactions there. But for the Qatari, it was up by 0.79%. So that's it for the Middle Eastern market. And let's move over to the United States, where we see the stock futures mostly in the green and tracking that positive close where we saw on Friday on Wall Street, where the market, well, it was albeit kind of a rocky week last week, but then the markets have been making a comeback, and that's because investors are eyeing out for the latest corporate earnings, a key labor data, as well as the Federal Reserve's meeting, which is expected to kick off tomorrow, and then the outcome of that meeting will be out on Wednesday. So all eyes for that market, where we see all of the traders are eyeing out for that. Now, in terms of the earnings, we're expecting the United States will be expecting McDonald's, Coca-Cola, Apple, as well as Amazon, and that is shaping up to be a very strong second quarter for the U.S. market. So that's it in a nutshell for the markets around the world.
All right. Thank you so much, Aniti.
Pleasure.
And I know those data from the United States will certainly change the colors on the board. Now let's leave the United States and go to Europe, where the Deutsche Bank's shares are down 5.5% in early trade on Monday after news that a long-running lawsuit could cost Germany's largest lender up to 1.3 billion euros. Wow, that's a lot of money. Let's have Ekrem now. Ekrem, good afternoon. So, what's the update now apart from this initiation of this lawsuit?
Thanks for having me, Ini. Deutsche Bank's shares indeed took a significant hit this morning during early trading. This downturn comes after latest developments in a long-standing lawsuit that could potentially cost Germany's leading financial institution up to 1.3 billion euros. The setback arrives just after Deutsche Bank celebrated better than expected earnings last week, and this is an achievement that momentarily boosted its stock. However, the positive momentum has been dampened by this ongoing legal challenge, a remnant of its acquisition of Postbank, which has continuously plagued the bank with issues.
So, talking about this lawsuit, what's the story behind it?
Well, last Friday, Deutsche Bank unexpectedly announced that it would set aside provisions to cover potential claims from this lawsuit. The bank strongly opposes the notion that it has underpaid, although it did not disclose the exact amount earmarked for these legal contingencies. However, it's known that the claims involved total about 1.3 billion euros. In late 2023, the bank encountered significant issues with the integration of Postbank's IT systems, leading to severe disruptions. Numerous customers were locked out of their accounts, internal workflows were heavily disrupted, and there was a notable increase in customer complaints to the regulator. In response, Germany's financial watchdog appointed a special monitor to oversee Deutsche Bank's efforts to resolve these issues. Additionally, Deutsche Bank continues to grapple with long-standing legal challenges from former Postbank shareholders who have been asserting for 14 years that they were underpaid when Deutsche Bank acquired their shares.
So I wonder I hope this is not affecting other banks in the market.
Well, in it today, investors across Europe are bracing for a volatile currency market. This comes after a sharp turnaround in the yen, which reversed its slide past 160 per dollar on Monday. Market analysts suggest this sudden strengthening of the yen could indeed be a result of intervention, although we will need to wait until Tuesday for any official confirmation from Japanese authorities, as today Japan is observing a public holiday. On another note, Germany is set to release preliminary inflation figures for April later today, offering key insights ahead of the broader inflation and economic growth data from the wider Eurozone on Tuesday. This could potentially reinforce expectations that the European Central Bank may begin its rate easing cycle in June, although any subsequent moves are anticipated to be gradual.
All right, Ekrem, thank you so much. Well, June, that's what we're hoping US would do, but now they've moved it to like September for interest rate cuts. Let's come back to Africa now and talk about a South Africa economy. Well, it seems that the government policies there is under a lot of criticism. South Africa's microeconomic policies, the chief economist of Efficient Group, Dowie Rod, says it is flawed and highly incompetent. He said that the country faces high inflation due to load shedding, emphasizing that the government's mismanagement of state-owned enterprises, especially Eskom, is significantly impacting the nation's economy and discourages a foreign investment. And in Uganda, there's a bit of stability as the shilling there was unchanged on Monday as dollar inflows from exporters of commodities like coffee and gold provided support. Commercial banks quoted the shilling at 3,810 to 3,820, and that's the same level that it closed with on Friday. The Apex Bank in the country is still being criticized, though, following a recent directive that all digital financial transactions of 1 million Ugandan shillings and above have to be completed upon the presentation of government-issued ID document. And this is sparking a lot of reactions. Critics say the move announced by the country's central bank will bring about several challenges and slow down business, given that many citizens in the country do not have ID cards. And we also told you that story about Egypt, where they're going to be having about 66 billion Egyptian shilling of treasury bills open today for in that country. If you could cross over to Egypt, you may be able to invest. But it's obviously one of the moves by the government to mop up cash from circulation and attract investment into the economy. But for now, let's go to cryptocurrency and see what's going on about a week after halving.
Right.
A week after halving, yes. I mean, I'm glad halving has come and gone.
Right.
Let's see the movement that was promised.
Yes.
Although I think I hear miners are losing some money.
Oh yes, miners are losing money because once
that was the essence of the halving.
Yeah, to cut the rewards for mining a block of Bitcoin, that was cut from about 6 BTC to 3 BTC. So you can imagine miners that are used to bigger revenue having to cut back at this time, and they still have to pay for electricity and all of that. So definitely we'll find out if they're going to keep mining Bitcoin.
To be a discouraging factor.
Exactly. But right now it's a red market this afternoon. There, if you take a look at the color on the screen there, we see neutral. Yeah, we've gone from greedy to neutral at this point. So investors are not as bullish as they were a few weeks ago. So now they're kind of on the fence at this time, not bullish, not bearish, just in the middle. They're looking for some price action. Let's look at the top headlines this afternoon. We're seeing Bitcoin miners are facing financial squeeze now with the mining reward cut from 6 Bitcoins per block to about 3 Bitcoins. They also see a top voice in the financial industry, Peter Schiff, there talking about Bitcoin would hit about $59,000 soon if $60,000 doesn't hold. And we're seeing Canada, Trudeau's proposing 67% capital gains tax on crypto traders at this time. I think it's about 50% currently, but now looking to increase that to about 67%. Let's bring in Chimeze Chuta now. He's the founder of Blockchain Nigeria User Group, joining me via Zoom. Great to have you on the show. Chimeze, you might have to unmute. I see your mouth moving, but I can't hear you. Let's try again.
Oh,
fantastic. Yeah, have you now.
Yeah, so thanks for having me, Ladi. Always a pleasure to be on your show.
Always great to have you. So now the rewards have been cut from 6 BTC to 3 BTC for each block mined. So it looks like it's getting less profitable, to mine Bitcoin. But I want to believe the miners are used to this now. This is not the first halving.
Okay, so there are two aspects to this. So the first aspect is that the mining rewards have been cut down from 6 BTC, 6.5 BTC to about 3.55 BTC at the moment. And on the other side, you also see an increased difficulty in mining, because what the Bitcoin protocol does is to make it more difficult for you to be able to mine Bitcoin. And even if you're mining the Bitcoin, you'll mine much less than what you used to mine before the halving itself. So the miners have to be, they're currently grappling with the fact that they are getting less money out of the mining blocks, and also have to do maybe twice the amount of work that they needed to do to mine that half that they are getting. So it's really a predicament.
Yeah, and I'm wondering, do we have any Bitcoin miners in Nigeria? And definitely, you don't want to be mining Bitcoin if you're in Band A.
Well, I don't know of any Bitcoin mining facility anywhere in Nigeria, but I know that there are node operators. I used to operate one of the nodes out of Nigeria, and there's a difference between mining Bitcoin and operating a node. Why the miners solve the puzzles and use a heavily integrated specific machines to mine Bitcoin and confirm transactions, the node operators document every single transaction that is done on the Bitcoin. So they don't need to have mining rigs and all those application-specific mining equipment that miners use. So in Nigeria, you can see a few node operators, but I don't definitely know of anybody who is currently mining Bitcoin in Nigeria.
Exactly. Well, let's look at some calls at this time. Everyone's expecting a big pump, post-halving. But we see Peter Schiff is saying $59,000 could be next for Bitcoin. But I guess the question now is, has Bitcoin reached the peak for this cycle?
Well, to be able to actually predict accurately the Bitcoin peak, you need more than a wizardry power to be able to do so, because these things are determined by demand and supply. Like you earlier said, the sentiments have actually dropped so much. Currently, we have it at neutral. That's about 57%, meaning that not much people are interested in buying Bitcoin at the moment. Okay, and when such things happen, it means that a lot more people are going to be selling off their Bitcoin. Okay, but you see, Bitcoin is driven not just by sentiment, but also by global economic indices. There are a lot of things that happen across the globe that makes the Bitcoin prices to go up or go down. Right now, there are a lot of undecided issues. The rate cuts are there. The looming war in the Middle East are there. You also have people like Peter Schiff, as mentioned, who are gold proponents. These are the people who want to see Bitcoin fall and gold rise. But I don't really think that the problem is the race between Bitcoin and gold. These two asset classes have their roles to play in today's financial market. But the most important thing is the demand and the supply arm of things. Currently, there are not much interest in the demand for Bitcoin. And it's not because of any other thing other than there is a circle there. Okay, so people are currently looking at the fact that Bitcoin is going to be more expensive to acquire. And because it's going to be more expensive, there's not much interest in putting their money to it. So the next thing that we are expecting is for fundamental factors that will create a global movement for the asset to happen. Okay. Before we can see that sporadic move of Bitcoin again.
All right, I guess we'll keep tracking to see if investors in this market actually smile post-halving. Thank you so much, Chimezie Chuta, founder of Blockchain Nigeria User Group. Thank you.
Thank you so much.
All right, so Ini, there you have it. I guess the question is, what's going to happen next post-halving? And we still have the U.S. Fed, meeting, I think starting today to tomorrow. Middle East tension. So there's a lot, playing into Bitcoin at this time.
And there's also the Band A too.
Yeah, Band A. Yeah, you don't mind if you're in Band A.
All right, Ladi, thank you.
Thank you.
Well, that's it on the program. Today's Monday, so we still have 4 days. If you've missed this, then you can watch it, but we'll have a better package coming your way tomorrow. I'm Ini John Mekwa. I'll see you on the Stock Market Report at 10 p.m. Have a great day.